Can dead malls become tomorrow's dream offices? Some experts think so. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Retail to office conversions are emerging as a creative fix for two of commercial real estate's most pressing challenges: stubborn retail vacancies and rising demand for flexible, creative work environments. Once viewed as a last resort for struggling assets, these conversions are now drawing growing interest from developers, designers, and institutional investors alike. Their appeal lies in a rare combination of location, scale, and adaptability. For example, Loeffler Companies has relocated its offices to a former Sam's Club grocery store in St. Louis Park, Minnesota, which has been repurposed into modern workspace. This transformation was captured by Brandon Stengel, courtesy of Gensler. With the right partners and vision, these underused assets can become lively workplaces that meet the needs of modern office tenants, ultimately transforming a liability into a lasting source of value. The collapse of traditional mall anchors, particularly in Class B and C properties, is creating fertile ground for such conversions. Deborah Smith, co-founder and chief executive officer of CenterCap Group, explains that consumer appetites have shifted toward immersive experiences like entertainment and food and beverage that elevate retail space from mere shopping zones into destinations. Retail to office conversions are emerging as a creative response, spurred by the return to office movement and the widening quality gap between trophy and secondary office spaces. Many aging retail structures offer inherent advantages such as open floor plans and strategic locations, making them ideal candidates for conversion into flexible, amenity-rich workplaces. Deanne Erpelding, managing director with Gensler's Minneapolis office, notes that the architectural bones of retail buildings offer a lot of opportunity. With generous floor plates and soaring ceilings, they can be reimagined as engaging workplaces that support collaboration, wellness, and community. Data from a 2024 CBRE office conversion report shows that developers are expected to remove 23.3 million square feet of office space this year, 12.8 million through conversions, and 10.5 million via demolitions. Although multifamily remains the dominant destination for conversion projects, retail to office initiatives are quietly gaining traction in select markets. Cities like Dallas, Cleveland, and Minneapolis are leading the charge, thanks to favorable demographics, civic support, and an oversupply of aging retail assets. From an investment perspective, retail to office conversions often pencil out more favorably than retail to multifamily redevelopments. One reason is the potential to pre-lease space before completion, providing a measure of financial certainty that's rarely possible with multifamily projects. However, challenges remain, such as the need for modernizing mechanical, electrical, and plumbing systems, and addressing the lack of natural light in deep floor plates. Looking ahead, Smith expects investor interest to stay measured due to the challenging capital raising environment. Even so, there's growing institutional interest in niche asset classes in general, though this niche is still nascent. For that opportunity to endure, conversions must be strategic, not reactive. The projects that succeed will be those that align with real market demand, community needs, and long-term vision. In a recent interview, Terry Blanca, the chief executive officer of Blanca Commercial Real Estate, spoke about the implications of securing a lease with Blackstone, the world's largest private equity firm, for a new office space in Miami. This significant move is expected to have a transformative impact on Miami's office market, signaling confidence in the region's economic growth and potential. The lease with Blackstone reflects a broader trend of billionaire-backed projects reshaping South Florida's office landscape. Notably, billionaires Ken Griffin and Stephen Ross are spearheading new office developments in the area, bringing additional attention and investment to Miami's commercial real estate sector. These projects are not just about creating office space, they're about redefining the business environment in South Florida. Blanca highlighted how these high-profile developments are setting a new standard for office spaces, with a focus on modern amenities and sustainable design. The involvement of big names like Griffin and Ross adds a layer of prestige and attracts further investment, potentially leading to a ripple effect in the local economy. Such developments also underscore the growing appeal of South Florida as a business hub, attracting companies and talent from across the United States. The conversation with Blanca also touched on the strategic importance of Miami in the broader commercial real estate market. The city's unique position as a gateway between North America and Latin America makes it an attractive location for multinational corporations. This strategic location, combined with favorable tax policies and a vibrant lifestyle, continues to draw businesses to the area. As these developments unfold, they're expected to influence office markets beyond South Florida. The trends and innovations emerging from Miami could serve as a blueprint for other cities looking to revitalize their commercial real estate sectors. This cross-border relevance highlights the interconnected nature of modern real estate markets, where developments in one region can have far-reaching implications. Arcapita Group Holdings Limited, a global alternative investment firm, has announced its exit from ARC-US Industrial Portfolio 6, a Class A industrial distribution facility in Dallas-Fort Worth, Texas. This facility is fully leased to Federal Express Corporation, also known as FedEx, under a long-term triple net lease arrangement. The asset has been acquired by Ares Management, a leading global alternative investment manager. The facility, which spans a substantial 776,629 square feet, was initially acquired by Arcapita in January 2021. Its strategic location was a key factor in its selection, being close to major interstate motorways, intermodal rail terminals, and FedEx's second-largest distribution hub in the United States, just 6 kilometers away. This positioning makes it a critical node within FedEx's logistics network, serving a dense population base and a region with robust demand for industrial space. Ahmed Al-Sharawi, the managing director and global head of the private capital group at Arcapita, emphasized the transaction as a reflection of their disciplined approach to real estate investing and portfolio management. Al-Sharawi noted that the firm's logistics strategy targets mission-critical assets situated in major distribution hubs, marking this transaction as another milestone in Arcapita's United States industrial real estate strategy. In recent weeks, Arcapita has exited more than $200 million in United States industrial real estate. This includes the sale of 9 industrial real estate assets totaling 1.5 million square feet in Indianapolis, Indiana. This move underscores the firm's ability to identify, manage, and deliver value across high-quality, income-generating assets, even amidst the current macroeconomic environment. A hotel in Pompano Beach, known as the Lighthouse Point Hotel, is poised for a major transformation. According to a recent article by Brian Bandel from the South Florida Business Journal, this hotel could be redeveloped into apartments, reflecting broader trends in the commercial real estate sector, where hospitality properties are being repurposed to meet residential demands. The potential redevelopment is part of a growing movement to convert hotel spaces into multifamily residential properties, a trend that's gaining traction in coastal cities where land is at a premium. This shift is driven by the rising demand for housing and the challenges faced by the hospitality industry, particularly in regions heavily reliant on tourism. The redevelopment of the Lighthouse Point Hotel into apartments could provide a substantial boost to the local housing market, offering new residential options in a desirable coastal location. This project highlights the adaptability of the commercial real estate sector in responding to market demands and the ongoing evolution of property use. Such transformations are not only happening in the United States, but also have cross-border relevance, as similar trends are observed in Canadian cities like Kitchener-Waterloo, London, and Cambridge, Ontario. These areas are also experiencing a shift in property use, with developers looking to maximize the value of existing assets by converting them into residential spaces. As the commercial real estate landscape continues to evolve, these adaptive reuse projects underscore the importance of flexibility and innovation within the industry. By repurposing existing structures, developers can meet the changing needs of communities while also addressing broader economic and environmental challenges. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.